Welcome back to the channel, Crypto Trend Trader, and today we're going to be taking a look at CVNA, CARVANA. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, so today we're going to be doing a little long-term technical analysis on CARVANA, at least as long-term as there is. Alright, so we've got the monthly chart on CARVANA here, going back to the IPO in 2017. Came out here, dropped a little bit from the IPO value, $13.39, dropped on down to about $8, so it was almost cut in half within the first 2 months. After that, went on a very powerful uptrend, straight up rip from that $10, essentially up to about $375. From that point in time, we went ahead and drew a fib from the bottom of the range to the top of the range. We'll go ahead and flip that over to blue. So now we have our Fibonacci from the all-time low to the all-time high. And then what that's going to do is project out potential targets since now we have taken out that low. So we see some fairly technical moves based on the monthly at these key levels. We see some clear interaction, support at the 5, dropping through support, back testing with a wick to the 0.5, and then again resistance at the 618, etc., etc. Once we round tripped it and came back down here to the all-time low, which again was that initial sell-off after the IPO, we took that out and sold off aggressively to the downside. Made it almost perfectly to the 1.236 at $3.36. And then we saw what amounted to a dead cat bounce. So we still have the better part of the month here, about 2 weeks left. So about halfway through, we've seen a nice little bounce off of the lows. But the most important thing to pay attention to at this point in time is just how far CARVANA came down. So it made it down to essentially 99% to the downside. And even after the most recent bounce, which was over 50%, it's still down 98.55%. So compared to the top right here, even after the 50% move to the upside, it's still down 98.5%. So that being said, we know the momentum indicator oscillators are very, very beat down. All red histograms on the TDMACD inside of the bearish control zone basically hang out at 0 on the stochastics. Very, very brutal downtrend. And no signs of letting up, even with that wick. Now, if we switch over to our weekly and just check out what's happening here. Here on the weekly, we're seeing something a little bit different. Obviously, putting in substantially lower lows. But when we come here and look at the stochastics, we came down essentially to the same level. So we see some potential bullish divergence there if we do see a little more of a bounce to the upside. We also see a bunch of green histograms over the slope line, and the slope line is flipped blue. So actually, we're starting to build a little bit of momentum to the upside as we continue to put in lower lows. So what does that mean? It essentially means that the moves that have been taking place are unsustainable, which makes sense because August, this thing was valued at $54 and now it's valued at $5. So essentially in the last few months, it has lost another 90% of its value. So obviously unsustainable. This thing's not going to go to 0 in a hurry, but looks like that's likely where it's headed. So now if we just zoom in here and we check out the daily, we see again that violent sell-off. We have come out of the bearish control zone, hard buy signal, bunch of green histograms above the slope line, and it is blue now. We did get a gap down here from that 672 as we broke down to new lows, and then now we're just coming back up to close the gap. So the next target to the upside on CARVANA is actually like $6.64 to close the gap. At that point in time, it's going to look like a descending triangle, a breakdown from that triangle, measure move to the 1.236, a back test of what was support as resistance, and then likely continues to the downside. So the technicals look very, very bad as of now. Now, if we do start coming up here and reclaiming that previous support level, reclaiming the previous low at about like $8.30, then we can start talking about potential for this thing to move back up. But it doesn't seem likely right now. And if we just take a quick look at the fundamentals as well, we're just going to pull up the financials for CARVANA. And essentially we see the market cap now is about $1 billion. $1 billion in market cap. And we see the income statement, revenue was essentially 3.5 in Q3 of 2021, then 3.7, 3.5, 3.8, 3.4. So revenue is basically staying the same, but we see the net income going from net 32 loss, net 89, net 260, net 238, all losses, and then net 283. So we see they were going from basically losing 32 million to losing 283 million, 1 year later. So obviously they are literally just bleeding cash at this point, about $250 million per quarter. So that is really, really bad. And then if we look at their balance sheet to see, hey, what kind of condition is this company in? Well, we see in Q3 of 2021, total assets were about 5.3 billion, total liabilities about 4.6, debt to asset 86%. And then we see essentially debt to asset rising to 92%, then 99.3% in Q1 of 2022, came down a little bit to 92% in Q2 2022, and now here we are back at 96%. So we have total assets of 9.62 billion, total liabilities of 9.25 billion, 96% debt to asset ratio, and the market capitalization is about 1.3 billion. So this thing is in disgustingly bad shape. Not only does this thing look like the actual stock wants to go to zero, the actual company is likely going to file bankruptcy. Now, the truth is, once something is down 90%, 95% in particular, last thing you want to do is bet against it, because the probability is if it's down that percentage, anything that does propel it back to the upside will be a very, very violent move. And the most important thing to remember is we displayed earlier that we were down 99% from the bottom right here just to where we're at right now. This asset has rallied 52% to the upside. So we could go down another 99% from where we're at now or from the lows, and that still doesn't technically take it to zero, but basically would. But in order to go up, 99%, all we would have to do is just get back to $10.92. Now, I'm not saying that happens. I'm not saying Carvana is going to go back to $11, but you're betting basically that after this thing has fallen from $375 to almost zero, that it's more likely it goes all the way to zero than it does bounce back up to $10. And to me, that's a bad bet. So there's asymmetric risk reward is essentially a key part of our trading strategy. Obviously, momentum as well. The momentum is still very much to the downside, and the risk reward is very much to the upside. Because essentially, one day, let's say Carvana gets it all together, they get bought out by somebody, they go back up here. Let's say they don't even go to all-time highs. They just backtest that 0.5. They retest that previous level of resistance and the 200 moving averages. That's an 891% move to the upside. It's impossible to get an 891% move to the downside. So if you're betting right now, hey, one day this thing goes back to $55 or it goes to zero, you're getting basically a 9-to-1 risk-reward ratio, because it can only go down 100%, but we have an easy example right here of how it could go up 900%. And regardless, even if you don't believe that's ever going to happen, it'll never go back up there. We could easily get a dead cat bounce, short squeeze, profit taking, basically anybody that was short on this thing just closing out their shorts, taking profits, could easily see this thing bounce back up, to essentially 100% move back to the upside. And again, you're betting that there's equal probability it goes to zero or it goes to $10. That's a terrible risk reward ratio. All of the risk is to the downside because your maximum is capped at 99%. As we're to the upside, it's basically infinite at this point in time, because, just to get back to, let's again say one day it got back to all-time highs, you're talking about a move of 6,665%. And again, you're betting it's that or zero. So I don't like the idea of asymmetric risk reward that does not favor me. Obviously, I'm looking for those positions where I have the probability to go to the upside. So again, once something is so beaten down like this, even if you're betting on it being a zero, the risk reward ratio is just not there. You're better off just saying, hey, I'm betting it's a zero, so I'm just not going to participate, than actually betting against it. Now, if a situation comes out where it gets bought up by somebody or something like that, and we see a massive pop back to the upside to retest like $19 or one of these key resistances or something, then I think it's probable that people will come back in and start shorting this thing. But at this point in time, there's really only two paths for Carvana, and it's basically bankruptcy or somebody comes in and buys them because they don't have enough cash, the company is not worth enough, and their liabilities are basically even to their assets. So if they did even try to liquidate all of their assets, they're likely not going to get their book value for them. So more realistically than that, they're already illiquid and very close probably to insolvent. So just a matter of time before one of those two things happens. Either one is possible. Obviously, this type of time in history is notable when we get the most mergers and acquisitions. So it does seem probable that someone steps in and buys this one up. And if you're betting to the upside, that's basically what you're betting on. But for me, I got to stay away from this one. It's already up too far off the initial bounce of the 1.236. If it did have another leg down and we saw it go much lower, down to like the 1.382 or 1.5, I would potentially take a trade setup off of one of those. Again, just assuming that it's going to zero, but with all the reward being to the upside. So that is it for today. Taking a quick look at Carvana long-term technical analysis, as well as taking a look at the fundamentals. It's in really bad shape at this point in time. Doesn't mean it can't go higher, doesn't mean it can't go lower, but once something is down this much from the all-time highs, again, you have to be very, very careful because volatility could be 100% move in just a matter of days or weeks to the up, or like we just saw recently, a 45% move to the downside. So that being said, that is it for our long-term technical analysis for Carvana Company, CVNA. I'm, of course, Crypto Trend Trader, and make sure to like and subscribe, open to video recommendations or requests as well. But most importantly, remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Crypto Trend Trader, and I'm out of here.